So, a few hours ago, Rishi Sunak delivered his first budget in this government. What did we actually see from a personal tax perspective? Aside from an increase in the lower earnings threshold for national insurance contributions, all of the income tax rates have stayed the same. So 20% for basic rate taxpayers, 40% for higher and 45% for additional rate taxpayers. The personal allowance has also remained static at $12,500 for the next fiscal year. In terms of dividend taxation, again, there were no changes to the rates that apply. So 7.5% for basic rate taxpayers, 32.5% for higher rate taxpayers and 38.1% for additional rate taxpayers, and the dividend allowance also remains at £2,000. For inheritance tax purposes, again, we've seen no changes, and for capital gains tax purposes, the annual exemption has increased, or will increase, should I say, from the start of the new tax year to $12,300. Interestingly, the bit that's caught our eye is the changes to life policy taxation in determining the loss of any personal allowance. These changes are to take effect from today. Ordinarily, if you had an individual who had income of, say, £30,000 and had made a large chargeable event gain, you would add that gain to their other income to determine whether that takes them above £100,000, thereby working out whether or not there'd be any loss of personal allowance. However, legislation will be introduced whereby it will now be a situation where instead of adding the full gain to their other income, you would only add the top slice gain to the other income to determine loss of personal allowance. Please keep an eye on TechLink, because we will be writing some detailed material on these changes.